Yo, where the flow, where the bros at, where the bros, who tryna bend, like, who tryna call me their friend, send me, damn, not Benz, up top with a B in my head, who good at bros, part 4, principle 4, market structure, let's get it. We're looking at market structure today. We're just gonna look at like, the basics, like, kind of the building blocks of market structure, highs and lows, lows and highs, why it matters, and impulsive and corrective moves, also known as, or what I like to call them, extensions and retracements. Let's get it. All right, so there's 3 ways market can move. Oh, let me check this position. We in a bit of profit. All right, let's go. So there's 3 ways market can move. We can move in, let's look at the first situation. We can move up. Simple as that. We can move up like this. When we're moving up, we call this bullish. So instead of saying, oh, we're moving upwards, that's lame, bro. We have a cool word, bullish. So cool. Market is bullish, we say. And there's characteristics of which we can identify bullish market structure, and that is with higher highs and higher lows. You'll probably asking, what is a high? What is a low? All a high is an up and down movement. Same with the candles, up and down, but we'll get into candles later. We'll just use lines for now. Up and down. All a low is a down and up movement. And I'll show you now. You see how we go up and down? Cool. This we call a high. You see how we go down and up? This we call a low. And how we identify we're bullish, how we identify we're going upwards, we have higher highs and higher lows. So this up and down, this recent high, oh, that's equilibrium, what the fuck? Shit, man. Fuck, man. What the fuck, man? Alright, cool. This up and down, this recent high is higher than this previous high. So we call this a higher high. Then this low, recent low, down and up, is higher than this low. So we call this recent high, low, a higher low. Oh my god. Cool. So market, when we're going up, when we're bullish, we go higher highs, higher lows. So high, low, higher high, higher low, higher high, higher low, and so on. Cool. That's type 1 of how market moves. Let's get into the second way market can move. Market can move down. I know, right? Wow. Cool. Same with bullish, we have highs and we have lows. Up and down, this is a high. High. Down and up, this is a low. But when we're moving downwards, oh shit, I forgot to tell you. When we're moving downwards, we call this, or the fun word for it is bearish. We say market is bearish. So we use bulls for upwards, because bulls are strong and they go up. Bears are like, and they go down. Bearish. Cool. And then for, the characteristics of identifying when we are bearish, we have lower lows. So down and up, this is a low, but this low is lower than this one. So this is a lower low. Lower low. And lower highs, up and down. This high is lower than this one. This is a lower high. Lower high, lower high. Lower high. Cool. And then that's it. That's bearish market structure. Low, high, lower low, lower high, lower low, lower high, so on. Cool. Let's look at the third and final way market can move, and the way all traders hate because we can't make money off it, bro. The third and final way is sideways movement. This is like no movement at all. Market has no sense of direction and doesn't know where to go. So it moves sideways. It chops up like a saxophone. All right. We don't have any lower lows or lower highs or higher lows. We just move sideways, and we can identify this with our eyes and with a little two lines up and down. You can see there's no direction. We're not going up, we're not going down. There's no higher highs, higher lows. There's no lower lows, lower lows. Lower lows, lower highs. And we call this sideways movements or consolidation. Consolidation. So when market is moving sideways, we say market is consolidating. We hate it. Move up and move down. Cool. And I want to quickly show you what impulsive and corrective moves are before we look at quick examples on the chart. So let's just quickly mark out, bullish scenario. We're moving higher highs, higher lows. Cool. You see this, we'll look at this here. You see this kind of long move up that forms the higher high. This move is called an extension. It's common sense, bro. It's extending. And then the move smaller that goes down is called a retracement. We're retracing. So I will label it out with a circle for fancy purposes. Boom. This is called an extension. Why? Because we are extending. Wow. Not extending, extension. Also known as, for the fancy term, impulsive move. No one uses this word though. We always say extension. But just so you know, impulsive move. And then this movement downwards is called a retracement. Retracement, also known as corrective move. So cool. Extension, retracement, extension, retracement, extension, and so on. Cool. And I'll quickly look at it for a bearish scenario as well, but I won't mark it out because you should know by now. Bang. Alright, we're bearish. Lower high, lower low, lower high, lower low, lower high, lower low. I'll do one more. Lower high, lower high. The low isn't formed. Why? Because there's a down movement, but there isn't up. So this technically isn't a low, but it's continuing. You get what I mean? So from this, where are the extensions? Where are the retracements? Tell me. Yeah. The long movements, extension, retracement, extension, retracement, extension, retracement, and so on. The extension is what forms the lower low for bearish scenario. The retracement is what forms the lower high. Cool. Now let's just look at some bearish, bullish scenarios on the market using candles. I know you don't know candles right now, but we'll just look here. Alright, we're bearish here. We can literally see this with our eyes using trend line as well. We are bearish. Remember I said that a high is an up and down movement. My up candles are gold, my down candles are white. So technically, this is a high. And my down movements are what, down and up. If my down candles are white, my gold candles are up. This technically here is a low. Cool. So with this logic, we are forming lower lows and lower highs. We have a low here, lower low. We have a high here, lower high. Down, up, lower low. Up, down, lower high. And so on and so on. And you can literally just tell by your eye, like we're going downwards. It's not that hard. Cool. And we'll get into candlesticks more in depthly so you kind of know how they work. And then for up movement, bullish, we are literally going up. So here, higher highs, higher lows. We'll just mark out one high. We'll say this. High. We'll say this. Low. So cool, we're going up. We have a higher high. We have a higher low. Higher high, higher low. Higher high, higher low, so on. It's not that hard. You don't need to just look at it and be like high high. You can literally tell by your eyes. Cool. And then for the last example, we'll look at kind of some consolidation. Let's try find something quick. Where are we chopping up? Where are we chopping up? I want like a clear example. I see bear, but like I want something crystal clear and like long and long. Alright, we'll use this. We'll zoom in a bit. So where my lines are, market has no sense of direction. You know, within this range, you know, it's kind of short. We're in the 5 minute time frame, or 4 hour, so it's fine. Market has no sense of direction. There's no higher highs. There's no lower lows. We're just like, you can tell by your eye. We'll get into the candlesticks, how to identify kind of what the candlesticks even mean, but you can tell visually. Where's my pen? We're chopping up within here, bro, until we finally break out and go lower. But within here, we're chopping. So this is sideways movements. And in the next video, because obviously we're not gonna keep on moving in high, you know, we're not gonna always move up. We're not gonna always move down. You see, from here, we move up. Come on, why do I keep pressing this wrong button? We move up, but soon after that, we move down. So I've identified like this singular market structure, up, down, sideways, but we need to see how they can link and how we can see how we can identify like a shift in market structure or a break of structure, we call it. So that's what we'll get into in the next trading video, how we can identify that we're going to change from moving upwards to maybe downwards, or change from moving sideways into upwards, or sideways into downwards, or downwards into upwards. And that's what we'll look at in the next video. But for now, you just need to understand market can move up, down, sideways. Higher highs, higher lows for up, lower lows, lower highs for down or bearish, and nothing for sideways. We hate sideways. Alright, cool. Catch you in the next video. Peace.